Right. Assalamualaikum warahmatullahi wabarakatuh. Okay, guys. So this we proceed to the next topic, MFRS 120. Alright. So this MFRS is regarding accounting for government grant, or we are going to focus on government grant only. Alright. Okay. So in this topic, we are going to talk about government grant. So what comes to your mind when we talk about government grant? Right. So basically, government grant is the grant that we receive from government, lah. What type of grant, what type of benefit that we receive from government anytime. For example, I have a palm oil. For example, I have a palm oil. So I ask government to assist me. So government can assist me by giving me cash, for example, or government might assist me in giving me a machine, for example, or government might assist me in helping me to buy a machine, for example. All right. So any sort of grant can be categorized under this topic, government grant, which is under MFRS 120. Okay, so we see this one, the definition of government grant: the assistance atau bantuan lah, in the form of transfer of resource to an entity in return for past or future compliance with certain conditions relating to the operating activities of the entity. All right. So you see, based on this, right, based on this definition, you know that government give us something in order for us to complete a certain thing. For example, government give me grant with the condition that I must uh I must make sure that I have a palm oil, for example, or other example, government give me grant. The condition I must clear the river, for example, the polluted river. I must clear the river, for example. If I'm not clearing the river, so the government might revoke back the grant, right? So that exclude those form of government grant which cannot reasonably have value placed upon them, and transaction with government grant which cannot be distinguished from the normal trading transaction of the entity. Cannot lah. If government purchase from you in normal transaction, it's not grant, right? So grant is a gift from government, but in return we need to fulfill a certain condition. Right? It's not a free gift from government. Right? It's not like hadiah from government. It's hadiah, but in order to earn the hadiah, we need to done something. Okay. So we proceed. Accounting for government grant. So how do we do accounting for government grant? All right. So basically, it is based on capital approach, which is grant is directly credited to shareholder interest, or income approach, which is grant is credited to income statement over one or more period. All right. So under MFRS 120, it is permit income approach. It is permit that is income approach actually. 120 permit, which is allowed the income approach. All right. So basically, this is the category of grant that we cover in this MFRS 120. So in this MFRS 120, we are going to cover grant related to asset. Okay, you see these two, grant related to asset, which is treatment is deferred income or writing off against asset. Got two treatment if grant related to asset. What does mean grant related to asset? Grant or government give us fund or grant in order to help us to purchase an asset, any asset, any asset. So in order for us to get an asset, government help us. So that one is grant related to asset. We can record in either using a deferred income method or writing off against asset method, right? So if it is grant related to income, this one is easy. We credit straight away to income statement, or we deduct against the related expenses. This one is easy. Grant related to income, like for example, the example I can give you, if grant related to income, uh, I want to clear a polluted river, for example, to clean the polluted river. I need, let's say, 100,000. Okay, I need, let's say, 100,000. 100,000 is expenses, right? I need to spend 100,000 in order for me to clear or to clean the polluted river, 100,000, right? So government give me grant, let's say 50,000. So what should I do with this 50,000? So I can either credit to income statement. Why credit? Because government give me, right? So it is income for me, right? Because government give me. This one is income method, related to income, related to income. So I can credit to income because I receive, or from the 100,000 that I need to spend in order to clean the river, so I deduct 50,000 because government give me 50,000, right? So the cost for me for cleaning the river is only 50,000. All right. So got two method for income, got two method also for asset. All right. So this is the example of related to asset, writing off against asset method. Okay, this one is related to asset, writing off against asset method. All right. If it is a writing off against asset method, yeah. So in this one, you can see that debit PPE, the asset itself is 1 million, credit bank 1 million. Okay, assuming that the company purchased an asset 1 million by paying bank, by paying using bank. All right. Then company receive grant. Okay, this is a grant. So this is a government grant. Again, this is writing off against asset method, because the name itself is writing off against asset method. So you see, we credit our PPE 500,000 and we debit bank 500,000. So in other words, actually, how much actually we record for PPE? Our PPE balance will be 1 million less 500,000. So our balance for PP that we recognize is only 500,000. So in order for us to do depreciation, you see 1 million less 500,000 is 500,000 divided by 10 years for depreciation. So you see, under writing off against asset method, depreciation are going to be calculated based on after minus grant amount. Okay, again, I repeat. Under writing off against asset method, depreciation will be calculated based on the figure or based on the cost after minus grant amount. So we've got debit depreciation, credit accumulated depreciation. Right. So how to record in a statement of financial position? Again, we are going to record at 500,000 because this cost is after minus grant, 1 million less 500,000, right? So the accumulated depreciation is 50,000. So we get 450,000. You can see here, the depreciation is 50,000. So actually this one is profit or loss because we don't have income. So we are going to get a loss by 50,000. This one is extract only, extract only. Okay. So what about deferred income method? All right. Under deferred income method, it is different. So again, we record the purchase of PPE 1 million, debit 1 million, credit cash or bank 1 million. All right. And then the grant when we receive by bank or cash, right? So 500,000. But we did not write off against asset. We record as deferred income. That's why the name is deferred income method. Okay, we put under deferred income under government grant. This one we put under statement of financial position, which is this is our liability. Okay, liability, because this one is unearned income that we are not yet earned. All right. So here 500,000. Okay, when we do depreciation using a full cost amount. Full cost is 1 million. Different with writing off against asset method, we use after minus, but now we use a full cost. 1 million divided by 10 years, we get 100,000. So depreciation, credit accumulated depreciation. And deferred income, the one that we earn already, we use similar useful life. The cost or deferred income here, 500,000, we divide by 10 years. Why 10 years? Because useful life is 10 years. So now we recognize deferred income. Deferred income we debit because this one is liability, right? Liability on debit side is decreased. So decreased by 50,000. And we put inside amortization of deferred income. This one is actually our income inside statement of profit or loss. You see, this one is income. Okay, income. Right, you see, Depreciation expenses is 100,000. Income is 50,000. So now you see, how much income? Income 50,000. Expenses 100,000. So you total up, you get negative 50,000, right? In other words, actually, so you see this one is PPE record at cost. Accumulated depreciation is 100,000. Okay, so deferred income, right? Deferred income, the total of deferred income is 450,000, right? 450,000. So by right, a total of 500,000 less with 50,000 this year that you earn, less with 50,000 here that you need to put under current liability. Why? Because another 50,000 you are going to earn next next year. Next year is less than 1 year. So that's why you put under current liability. Okay, understand? Right, again, I repeat, this 500,000 of deferred income, 50,000 you earn this year, you earn this year. So another 50,000 you put inside current liability because you are going to earn this next year. Something that we are going to earn next year, we put under current liability because it is less than 1 year. So the balance you put under non-current liability, which is 400,000. Okay. So another one, amortization of deferred income is 50,000. This one is income. Okay. And depreciation is 100,000. You see, a total are still negative 50,000, which is equal, which is the same with if you do using writing off against asset method. So again, any method that you use, you are still not affecting your profit or loss. Is going to be the same effect for profit or loss, eh? Right, yes. So that one is related to asset, writing off against asset method, and deferred income method. All right. So next, non-monetary government grant. All right. So what does it mean by non-monetary government grant? A non-monetary government grant mean that government give you non-monetary grant or non-monetary asset, not money. Government give you like machine or car, like for example, like for example, if you have a what apa for yeah, if you have a farm, for example, government give you tractor, so it is asset. All right, for non-monetary government grant 22A, government grant may take the form of a transfer of non-monetary asset such as land or other resource. Okay, for the use of it, in these circumstances, is usually used a fair value. Normally, we use fair value lah because that one is the current value or the market value that we can get, right? To account for both grant and that fair value. Okay, alternative, other than that, you can also use a nominal amount. What is nominal amount? Nominal amount is the cost that you incurred to acquire that asset. For example, even though you are going to receive a land for free from government because government give you, but in order to acquire that land, you need cost, right? Like lawyer fees or legal fees or any cost lah. So that cost is actually considered as nominal amount, but nominal amount normally the amount is lower. So that's why normally we are going to go for fair value because we want to know the current value of that asset. All right. Okay. So, government grant, including non-monetary grant at fair value, shall be recognized until the reasonable assurance that the entity will comply with the condition attaching to them and the grant will be received. This is the criteria or the condition for us to record the grant. Okay. So what happened if the condition we did not fulfill? So if the condition we did not fulfill, need to what we call as revocable or repayable of grant. We need to return back the grant. Okay, it is depends on the situation. Sometimes the government asks you to pay in full. Sometimes the government asks you to pay extra, or sometimes the government asks you to pay lesser. Right. So if government grant has been revoked or become repayable, should be treated as a revision to the accounting estimate. All right. So treated depends on how repayment are made. Right. If the payment of grant is related to income, therefore the grant should be applied first against unamortized deferred income. So we need to finish all our unamortized deferred income. Any excess should be recognized immediately as an expenses, if any. If the repayment of grant is related to asset, it should be recorded by increasing the amount, the carrying amount of the asset or reducing the deferred income balance by the amount of repayable and the cumulative additional depreciation without grant, right, depreciation without grant that we have recognized to date of an expense. In absence, the grant should be recognized immediately as expenses. So any extra depreciation that we haven't charged, we need to charge. All right. For example, if we need to pay back this 500,000, so our deferred income just now is 450,000, right? Current and non-current liability, right? So we need to eliminate this. Eliminate this, we need to put on debit side because it is a liability. Okay, we need to pay 500,000. So we are going to loss by 50,000. This is the amount that we are going to loss by 50,000. In other words, loss is actually the income that we recognize for the previous period. Okay, right. So next is the government assistance. So definition of government assistance is action by government designed to provide an economic benefit specific to entity or range of entity qualifying under the certain criteria. All right, does not include benefit provided only indirectly through action affecting general trading conditions such as provision of infrastructure in development in area or imposing trading constraint on competitor. This one, right? For example, right, you can see that a certain company in Malaysia, for example, TNB, right? Does TNB have competitors in Malaysia? No, right? Only TNB provide a source of electricity in Malaysia. So no other company can provide electricity to the public, right? Why? Because it is controlled by government. Yeah, this is the government assistance. Right? Government going to issue a license to certain party only in order to perform in certain industry. For example, internet, right? Not everybody can steal internet. Wow. Other example is selling what? Petrol. Right. No, no, not simply, oh, I want to start my new company selling petrol. So I start Arif Petrol, for example. Cannot, right? I need to obtain a license from government, right? In Malaysia, we have what? Petronas, Shell, Petron, BHP, right? Limited, right? Limited. All right. Okay. Not quantify and introduce into the financial statement. I don't need to show anything in financial statement. Examples such as then whose value cannot be reasonably measured are technical and marketing advice and provision guarantees. This is example of government assistance that cannot be recorded anywhere in our record. Government give us advice, government provide to us training. We cannot record, right? So no need to record. All right. Okay, so how about disclosure? In terms of disclosure, accounting policy adopted for government grant, including the method of presentation adopted by the financial statement. All right. So nature and extent of government grant is recognized in the financial statement and other form of government assistance received. All right. So unfulfilled condition or contingent attached to the government assistance that been recognized. All right. So that's all for this video. Thank you.